Hello, in this presentation we will look at financial statements and reports within our bookkeeping problem in Excel, keeping in mind how that same information could be input and generated within accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. Within Excel, we're actually going to create the profit and loss or the income statement and the balance sheet, and look at what the transaction report is and how it's basically generated within a bookkeeping problem such as Excel. We're first going to take a look quickly at QuickBooks before jumping over to Excel, see how this information might be generated within the QuickBooks program. Let's take a look at that now. First, we're going to look for the balance sheet. Within QuickBooks, once all the data has been entered into QuickBooks using typically mostly the items on the Home tab, the system will automatically generate the financial statements. And we've seen that process in Excel as we've gone prior to this. We've seen that once we create the journal entry that we can post that journal entry and then create the trial balance and the general ledger and the financials all in the same process. Anything that can be made in that automated way within Excel can be made automated into a system such as QuickBooks. So we'll see how that works when we go over to Excel and make those financial statements and see what it is being built from. The balance sheet then would be looking like this. All we'd have to do within QuickBooks or any accounting system would be to change the date, and then we would have automatically the report would be generated, and we may not even understand really how the report happened, and that's really the problem, because it's hard to understand how to read the report or fix the report if there's clearly problems with it, if we can't go back and really see what it was built from. So it's a similar way as if we're calculating something in a calculator and multiplying 5 times 5 without having any concept of what the concept of multiplication means. The answer will be right, but if we don't know the meaning of it, we can't make decisions based on it. And if the answer is wrong, then it's going to be difficult for us to go back and look at the operations and see which operation we probably input the data wrong. But where could we have gone wrong? We need to know something about the system in order to see how we entered the data wrong. So here's going to be the information. Now we can just export this information to Excel. That's true with just about any database program such as QuickBooks or any kind of database program. You usually have the option to export to Excel, which is a great thing to know and learn and be able to understand. So if we were to do that, we just export that, and Excel will create something that is similar to what will be putting together in our bookkeeping problem. We then look at the profit and loss, which is the equivalent of the income statement within QuickBooks. And once again, the information is already in there. It's just going to automatically generate. We just got to find that report, print it out, and there we have the merchandise sales, the service sales, the total income, minus the cost of goods sold, the gross profit, and then the income and expenses, giving us that loss of the $6,221. All we need then is going to be the date range, the from date, the to date, and once again, once we have that, just automatically happens, and we'll see how that gets put together, how that automatic process can be done through looking at this in Excel. And then it can be exported once again to Excel. Really a useful skill to have is to be able to export files from database programs to Excel. We can put that to the same database and in essence get the similar type of format that we will be working with here, what we're in essence going to be generating. And then we have the transaction list by date. So this is another report that can be automatically made within Excel after we input all this data that we've input already. It looks like this, and it's just going to give us a detail of all the transactions we've done by the date that they have happened. We'll compare this to what we have. It's going to be similar to the general ledger. This is like all the detail that we've been putting into the general ledger. It's just formatted in different ways. So over here we have the amounts here, and we have the types of things that have happened. We'll look at similar types of reports, in essence, with the main one being the general ledger report, giving us that detail of what is happening as it happens, as well as the general journal, which is giving us that detail of the transactions by date. Here we are in Excel. What we've done is hidden all the general journal entries. So notice we're only starting with the trial balance on the left, and we're going to go to the right and just use this trial balance in order to create the financial statements. So we've basically deleted the financial statements, and we're going to rebuild the financial statements using this trial balance so we get an understanding of how it is done. So remember, up till this point, what we've done here is we've reported everything to the general ledger. We've recorded journal entries to the general ledger. The general ledger was then used to create this trial balance automatically. We all won't go through the process of redoing that. But if we were to go through the process, note that all these amounts are just being drawn from, I'm going to undo that, the general ledger. So if I was just to say, where is this coming from? Where are all these coming from? They're the ending balances of the general ledger. So the general ledger is giving us all the detail to get to that ending balance, then being pulled over to the trial balance. So here's this amount here. That's just going to be the last account, the last running balance amount on the accounts receivable. This is the last running balance account amount on the inventory asset, and so on and so forth. And that's what's being used in order to double check that everything, the debits and credits, are the same. Once we've built this trial balance, then we can put it in different formats. This is in format of the debits and credits, meaning the debits minus the credits equal 0, or the debits equal the credits. Notice that the credits here are in brackets or negative numbers. So the positive numbers of debits minus the negative numbers of credits should be the same, and therefore one minus the other, debits minus credits, will equal 0. So all we do is just sum this up, and if it's 0, that means that the debits equal the credits. That's one format to format the double entry accounting system. Another format to format the double entry accounting system is the accounting equation, and that's going to be assets equal liabilities plus equity, or here it is, assets are those green accounts, liabilities are those orange accounts, and the equity accounts are all the blue accounts, everything down there. So all we've done here is just reformatted something just like a puzzle. We just said take it from a plus and minus format and say the same balancing concept in terms of the accounting equation, assets equal liabilities plus equity. And this is just all we're going to do when we go to the financial statements. That is the balance sheet. Assets equal liabilities plus equity. That's the balance sheet. So all we're doing, taking these amounts in terms of debits and credits, converting them from a debit and credit format to a plus and minus format to an equation format. That's what we'll do now. We're going to scroll all the way to the right to see the financial statements. They'll be the same financial statements we saw before, but now we've just removed the numbers and we'll just recreate these numbers. So here we have it. It's the same financial statements. We're just going to re-input the numbers for these financial statements. This will also help us to get an idea of the subcategories of assets here. So notice that we only have one. All the green accounts are going to be assets. As we put them into the balance sheet, we'll have subcategories. When you put them into software like QuickBooks, it'll also tend to subcategorize the asset types in order to drive those asset types. So we're going to go through this, and we have total assets. This is going to be the whole right or left-hand side of the balance sheet will give us total assets. And we're going to break that out first into current assets. It's nice to be able to look at the formatting of the financial statements as well, because that'll help you read longer financial statements, more complicated financials. Oftentimes we have current assets and we represent it with a colon, meaning, hey, this is going to be a subcategory of current assets under this. And then we often indent all the current assets in order to say, you know, these are going to be a subcategory, and we're going to break that out into the inner columns. Then we have the outer column where we will sum it up. Now, that doesn't have anything to do, this inner column and outer column has nothing to do with debits and credits. There are no debits and credits on the balance sheet. We don't want to explain debits and credits to others when expressing this data unless they're accountants. And so we're going to convert it from a debit and credit format to a plus and minus format. The balance sheet is actually a little bit more bulky. It's going to be longer. We're going to need these three financial statements, all this financial statements, to express the same amount of information we can basically get from a trial balance using debits and credits. But the advantage is that we don't have to explain debits and credits to anybody in order to express the data in this way. Debits and credits then are the building blocks. The balance sheet is going to be our form of presentation that will be more helpful for the majority of people we are presenting to. So all we need to do then is find a home for all these accounts on the financial statements, and as long as they are going the correct way on the trial balance, all these accounts on the trial balance, and as long as they're going the correct way on the financial statements, then we will be in balance, meaning the assets will equal the liabilities plus the equity. So let's just go through this. I'm going to start with the balance sheet. A lot of books will tell you to start with the profit and loss. I'm going to try to demonstrate why most books, a lot of books say that, and why I'm going to deviate from that. The main reason I'm going to deviate from that is because I believe the balance sheet is basically everything. It's the whole accounting equation, assets equal liabilities plus equity. And it's going to be easier for us to just start from the trial balance, top to bottom, assets, liabilities, and equity in that format. The reason that a lot of textbooks teach not to do this is because I think it's from the old days when we used to do this completely by hand, that you can't really get the equity section of the balance sheet without doing some calculation. In other words, you either have to take assets minus the liabilities to get equity, or you have to add up basically everything in the equity section down here in order to get the equity. This could cause a problem if we were doing everything with a paper and pencil. Very easy to do if we're using Excel or something like this, which we are doing. So I believe the benefits of starting with cash and going from the top to bottom and looking at the main financial statement, which has the whole point in time, the whole accounting equation within it, is the best way to go personally. So that's what we're going to do here. So notice that all these are going to be listed out. I'm just going to list all these accounts out, and we're going to list the zeros in there, and we're going to break out undeposited funds just so we can see them all listed out here. When we print these on other financial statements, we may group some of these accounts together. But all we're going to do is just go straight here. We're going to say in BX, this is a current asset, cash, equals this 94,437. And we'll just pull that down. I'm just going to use formulas in order to pull these over. The accounts receivable just equals that 1,115. The inventory equals that 1,945. And the prepaid insurance equals that 11,000. The short-term investment just equals that 12,000. Undeposited funds is going to equal that 300. And then we've got accumulated depreciation. Now, we don't see that here because there's a subcategory, meaning the accumulated depreciation and the equipment are going to be property, plant, and equipment rather than being part of the current assets. So what are current assets? Those are things that are going to be converted to cash or used pretty soon in order to help generate revenue within the company. Long-term assets are going to be something like property, plant, and equipment, things that we're going to have for a long period of time, like a building. We're not going to consume it anytime soon. We're going to have it for a long period of time. Why is it important to break those out? Because we want to be able to compare our current assets to our liabilities. We want to see if we can pay off our liabilities with our current assets. So that's one reason we're going to break that out. Then we're just going to add these up, and we're going to put those to the right-hand side, giving the subcategory of the current assets. Now, of course, we could do this if we did this with a calculator. We would just add up this column, 94437 plus 1215 plus 1945 plus 11,000 plus 12,000 plus 300. Let's see if I did that right. 128.97. Here, we're going to use the sum function. So this is the most popular function. We've seen this a few times. This is one you really want to know for sure. Equals SUM. And we're just going to double click that sum function and highlight this column. So it's the sum of BX4 colon BX9 and enter. And there we have it, 128.97. Now we're going to have the other subcategory, property, plant, and equipment. I'm going to indent this. Home tab. It should already be indented on your worksheet. And once again, we have a colon indicating that it's going to be a subcategory, and then we're going to have the accounts within it. Now, we're going to start with the other thing that we haven't seen. Note it's out of order a little bit over here. We had the accumulated depreciation before the furniture and equipment, and over here we have furniture equipment before the accumulated depreciation. Why? That's kind of an issue with QuickBooks. This is following the QuickBooks format. And the problem is that these two accounts are both in the same account type. They're both property, plant, and equipment. And accumulated depreciation, although it is typically under furniture and fixture because it's kind of a sub-account of it, because it's in alphabetical order within that category, it's that one before this one, accumulated depreciation before furniture and fixture. So the way to fix that is to use account numbers, but those start to complicate things. So when we bring it over to the balance sheet, we're going to represent it as it should be typically represented, which would be furniture and fixture on top. We're going to say that that equals the 98,000. And then there's nothing in accumulated depreciation yet. So I'm just going to go over and pick up that 0. Note that if it was 0 and we were going to bring these financial statements to somebody else, or if they're generated in QuickBooks, QuickBooks will have a function that just removes all zeros from the financial statements. A little bit more sophisticated. To do that, I'm going to show everything on the balance sheet so you can see how it can be automated and not use any complex type of formulaic, so that we would just remove the whole line item. That's a bit more complex. But I want to be able to see everything from the trial balance here to the balance sheet to show that it's basically just automated. And then we'd have to get a little bit more complicated to remove the items that are 0 if we're just going to automate the thing. Then I'm just going to say that it's going to be this minus this. On the outer column, the subcategory, remember, has nothing to do with debits and credits. These two columns have nothing to do with debits and credits. Just has to do with the account category and then summing them up to the right. So we're going to use a formula equals this and then minus the accumulated depreciation. Now, accumulated depreciation is a contra asset account. We'll talk more about that later. It's usually the thing that people get messed up when their balance sheet is not in balance. It's often because the contra asset account got added. Instead of subtracting it, we'll talk more about that when we have a balance in it. Then we're going to go to the total assets, and we're just going to highlight, we're just going to add these two up now, the two outer columns. And so we're going to be here in BY17. I'm just going to equals sum, use our sum function again, even though there's only two numbers. Double click the sum, and I'm going to highlight the outer column. Now, people also often get messed up or get confused because there's a lot of blank cells in the middle. That's okay. We can highlight those. They're just zeros. And for the software, sees them as zeros, that is. So if we select enter, we have the 218,879. If we want to check any of these numbers, it's really easy for us to do this. We can say, is that number correct? Well, it's the cash down to this account, and then QuickBooks will sum it up. It's 120,897. That looks right. Is this number right? Well, it's just that number, so that looks good. Is the total right? Well, if I highlight the entire thing, it's 218,897, 218,897. So it looks like we're good there. We found a home for all these. I'm going to put a little yellow dot next to these, or say that we found those. So those are all done. Now we're going to find a home for the liabilities. We're going to go over here to the liabilities. Same idea. We're going to have liabilities and then current liabilities, breaking out these orange accounts into current and long term. We start off with accounts payable. Nothing's in it once again, so typically we would remove that if we were going to present this information. But I want to show all the accounts where they would go in the balance sheet, and that helps us to automate this thing as we go. It's a little more sophisticated to tell the software remove the entire line if it's not used. So there's that. Then we have the Visa. Now note that I don't want this credit. I represented credits with a negative over here. We don't want to represent credits over here. This needs to be just a positive liability because we're converting from debits and credits to plus and minus. So in order to do that, I'm not going to put equals, I'm going to put negative of that number. And that tells QuickBooks I want to pull that number over and then multiply it times -1. And that'll give us a positive 1,000. Then I'm just going to do this for the rest. Interest payable, we don't have any yet. And we're going to say the loan payable, we don't have any yet. And then the payroll liability, I'm going to do the same thing. I'm going to put a negative here instead of an equal, telling QuickBooks take that number, flip the sign, negative of that number becomes a positive. We'll do the same for the sales tax. We're going to say negative of that number becomes a positive. And then we have the unearned revenue, negative of that number, and enter. And then we're going to have the total current liability. We're just going to sum this up over here. We're going to bring this back over here and just sum these up. Once again, just adding this plus this plus this. We're going to do that with the sum function in cell CC11 equals SUM, double clicking the sum function, and then highlighting from the 0 down to the 0 and enter. And that gives us the 2,721. I'm going to go ahead and underline this item. It should be underlined already in yours. And to double check that, we can highlight these over here and just say, is that right? We're not including the 72. 2721. These are credits. That's okay. We're not representing credits over here. They're plus and minus. We're then going to include this 72,000 all by itself over here in the long-term liability section. We're not going to have a subcategory that says long-term liabilities because there's only one line item there. So we're just going to give it its own section. We're going to pull it to the outside. We're not going to give it an inside section and then subcategorize it to the outside when there's only one line item. We're going to put it straight here in cell CC12. We're going to say negative of that number and enter. So those are going to be the items here. So now we're going to sum those up. Now we have total liabilities, which will be the current liabilities and that one long-term liability. We're going to use the sum function in order to add those up. Equals SUM, double-click the sum function, and highlighting the 2721 and the 72,000 will give us the 74,721. Once again, if we want to double-check that, that's all the liabilities. That should be all the orange accounts. If we highlight all these liabilities, all the orange accounts, we get 74,721. So that looks correct. Now we're just going to have the last, the equity section. Now the equity section only has one account in it. It's called owner's equity here. And what we have down here is owner's equity right there. What I'm going to do is I'm going to pull that number over and show that it's not correct, and then try to show why, and then we'll fix it. So I'm going to say, what if we pull that number up? I'm going to put it in the outer column because there's only one account we're going to have in the equity section called owner's equity. By the way, if it was a partnership, we would have multiple partners, so multiple capital accounts. If it was a corporation, we would have to break out the common stock and the retained earnings. However, it's all going to be the same in aggregate. In whole, in total, it's going to be the amount that's owed to the owner or the owner's claims to the assets. Okay, so we're going to record this then. I'm just going to sum this up. I'm just going to record this in the left-hand side. So I'm going to say negative of this number and enter. Now we're going to check if we're going to balance. We're going to add up the liabilities and the equity. So we're going to add up liabilities and equity and see if that matches what's on the assets as it should if our accounting equation is in balance. So we're going to say this equals the sum. Double-click the sum. And we're going to add up the 74,721 down to the 150,397. That gives us this 225,118. I'm going to just format that to this as well. Those two should match. Now it doesn't, of course, and that's the problem. Why doesn't it match? The issue is going to be this number. I'm going to make it yellow and say the issue is that number. And really, this ending equity isn't that number. This really represents the beginning equity. All this stuff will be closed out to equity, as we'll see shortly. So what we're going to do is sum up all this stuff. The ending equity should be all the blue numbers. So it should be 144,175. So let's put that number here. And note this is easy to do in Excel. What I'm going to do is sum this up, but flip the sign again. So we're going to do the negative sum of those numbers. So we're in this cell, we're going to say negative SUM, double-click the sum function, and highlight from here down all the way down to here, and enter. And if we do that, then we add everything up, then we are now in balance here. So meaning the total assets, the accounting equation, assets equal liabilities plus equity. So that's the number we need. Now this number, note what we did is we grouped all this stuff together. So I'm going to say this, we found a home for all these liabilities, and we kind of found a home for all of these equity sections as well, but we grouped them all together in one number. What we want to do now is break these out. We want to break these out into, multiple numbers. We want to find an individual home for all of them. So in other words, we're going to give us more detail to that number. We're going to take that number and get more detail from it and break it out into more detail. That more detail then is going to be the income statement and the statement of equity. It's really showing the timing behind these numbers. So we're going to scroll down. We're going to do the income statement first. That's going to be starting here and going down to there. We're going to start the income statement, find a home for each of those individual accounts individually. We will start with the revenue accounts, and we have a couple of them, so we'll do the same type of activity where we will have revenue accounts, income accounts in other words, and they will be subcategorized internally. We're looking at these three revenue accounts. We don't have anything in the rent revenue yet. We will in the second month, so once again we will populate that with a 0. We're going to put them in the inner column and then subtotal them in the outer column. Once again, the inner and outer column have nothing to do with debits and credits. We're just going to put the subtotals in the outer column and the amounts in the inner column. So let's do that now. Once again, this is a credit, and we want to represent it over here with a debit. Well, not a debit. We want to represent it over here with no debits and credits. So we're going to remove the negative sign by saying negative instead of equals of that number. Telling Excel, take that number and flip the sign. And there we have it. We're going to do the same thing for the other two. So I'm just going to say negative of that 0, which is, of course is just 0. And then we're going to take negative of the service revenue, the 508, and that'll flip the sign and give us a positive 508. I'm then just going to sum this up in the outer column. So we're just going to highlight these, and that would be the 2,975. I'm going to use the sum function to do that. So we're going to say this equals SUM, double click the sum function, highlight these 3 cells and enter. So there it is. If we wanted to double check this, that 2,975 is correct, we can highlight these 3 cells and we get that same 2,975. We're then going to take a look at the cost of goods sold. We're going to give it its own line because it's the major, most important expense when we sell merchandise, as we have here the merchandise sales. So we're going to take that here, and this is already positive, so I'm just going to say that this equals, and then point to that 1,950 and enter. Now we're going to calculate gross profit. Gross profit's going to be that revenue minus the cost of goods sold. So we're going to do that with a formula here. Equals revenue minus cost of goods sold. And that'll give us the 1,025. If we want to check that, we can highlight from here to here. That'll give us the credit plus the credit minus the debit of 1,025. Credits winning. That's the gross profit. Then we have a subcategory for all of the expenses. All the expenses down here we're going to have will be starting with the bank service charge on down, and most of these are 0. They're going to be here in the second month, but right now we're just going to keep the zeros here. We're going to populate these with zeros. Once again, if we were to give this to someone else, we would remove all the accounts with 0, but we want to see how we can automate this and how it is automated. So we're just going to say that this equals that 0. In the bank service charge, we have the depreciation equals that 0. We have the insurance expense equals that 0. Note that what we're not doing here are the adjusting entries at the end of the month. We're actually going to do that at the end of month 2. So the month 2 will have the completed process where we'll do all this. Then we'll do the adjusting entries and we'll do the bank reconciliations. We'll see that that will cause us a problem here when we go back and do the bank reconciliations and have adjustments to the prior month. And that'll be part of our process to try to figure out how to deal with that. And so we're going to have the interest expense equals this 0. The internet expense is going to equal that 0. Miscellaneous expense will equal that 0. And then we've got the office supplies, the payroll, and the telephone. Office supplies equals that 500. The payroll expense equals that 5,767 and enter. The telephone expense is going to be equal to that 360, enter. And then the utilities expense is going to equal this 620, enter. Now the interest income is another item. It's on the bottom because it's an income item, but it's not part of our normal process of operation. So typically that will go in the bottom in the other income and expense area. We're then going to subcategorize this. So if we highlight all these, adds up to 7,247. That's what we want over here in the right hand side. I'm going to go ahead and underline this for now. Just it'll be underlined when you make this in the worksheet. So then we're going to sum this up equals the sum. Double click the sum function. And we want this 0 all the way down to this 620 and enter. So there we have the 7,247. If we want to double check that number, we're just highlighting these and it'll sum it up to 7,247. Then we have the net operating income. We're just going to do something with the outer column now. It's not going to jump back and forth to the inner column and the outer column. We're just going to calculate one column at a time. In this case, we're going to take the gross profit minus the expenses. We're going to end up with a loss. So we are in BY 39 equals this gross profit minus this expense, and enter. So we're at a loss of 6,222. And then we're going to have that last line item here, which is going to be income for interest income. Interest and expense is also 0 here. This is a subcategory. We're going to have the other items here. We're going to put the only other item being the interest income at this time. Therefore, we're going to put it to the outside because it's the only item there in cell BY21, and just say that that equals that 0 and enter. Then we're just going to subtract out or add this last item. So it's the 6,222 plus the 0. I'm going to use the sum function to do that. Equals the sum of, and highlight these items. There we have it. So bottom line, we have net income or loss in this case of 6,222. Note we also calculated that here, and it came out to a positive number for Excel, but actually a loss in terms of debits and credits, meaning the credits of revenue were less than the debits, resulting in a loss. Here we have plus and minus format, the revenue here being less than the expenses, resulting in a loss, represented with a negative number here. Over here, the positive number representing a debit, which is the loss because the credits are less than the debits. So once again, keeping that in mind, it's going to be a bit difficult to do. We have to wrap our head around what's a debit and credit, what's a plus and minus, how do we flip the two, how do we convert and go back and forth from the two. So then we're going to go down here to the statement of equity. Note we've basically found another home for all of these accounts now. They're not tied to the balance sheet yet, and we'll have to figure out, how to do that. Let's scroll back over here. So I'm going to make these all yellow. But we at least found a home for them. The only thing we haven't found a home for would be draws at this time, and this number here, we grouped that together on the balance sheet, but we haven't really found a home for it originally or by itself. That's what we'll do in the final statement, the statement of equity. Statement of equity is going to start with the beginning owner's equity. This is usually an area where most people get confused. Where does that come from? I don't see a beginning owner's equity as of the beginning of the month at the ending of the month. But this number right here is really the beginning owner's equity typically, although it does include investments as well. If we look at the trial balance for that, we can see that more. If we go through here, I'm going to go back to the trial balance and scroll back here to the equity section. And here we have the activity that happened. Now, it's a little confusing for the first month, of course. This is our ending balance. Typically, for many months, we may not have any activity. None of this happening throughout the month, only having a beginning balance in essence here, and that being it, because the rest of it's going to be the activity in the income statement. But in this case, we put in all our beginning balances there, which are kind of like an investment, although we're going to assume that all this stuff was there from the prior month, and we just had to enter it into the system. And then this $65,000 was an added investment from the owner. So what we're going to do is we're going to take this $150, we're going to break it up between the beginning balance, which is really all this stuff, which we put in there. That's what was in the ending balance prior to this month, although we had not yet put it formally into the Excel process. And then we're going to break out the 65, that's the investment. So let's do that. We're going to scroll over here. I'm going to scroll down. And we're going to say that this beginning balance, well, let's say the $65,000 is going to be the capital here. So we know the investment is $65,000. That's what the owner put in. And then I'm going to do a little subtraction problem to figure this amount out. We're going to take this number here, and we're going to take out the amount of it that's the investment, the 65. So we're going to take the 150,397 minus the 65,000. Because this is a credit, I'm going to use the negative in our formula here. So in a formula, we're going to do this. We're going to put our cursor in BY45 negative instead of equals, and then point to that number. And then we're going to take that and that negative number minus that number. and that'll give us the 85, and that'll give us a formula to do that. So all we did in essence was take this 150,397 minus 65,000. That gives us the 85,397. We're doing that with a formula so that all we have to do then is really adjust this number, whatever those investments are, and this number will auto-populate there then. And so that'll be that. Then the net income, this is going to be generated from the income statement. So we've just calculated it right there. It's a loss. We're going to put that same amount here by saying equals and pointing to that 6,222. I'm going to highlight this as yellow. I'm going to go to the Home tab, Font, and highlight it as yellow, and highlight this as yellow to indicate where these financial statements are being connected. Those are where they are tied together. And then the draws, we don't have any draws. That would be if the owner took out money. We'll see that later. For now, we'll just put a formula to the draws. Now, the draws are a little tricky because they are an account, they're kind of like a contra equity account, meaning they're going to have a debit balance or they're going to reduce the amount of total equity. So when we put the formula here, it's going to be a debit balance, and we want it to decrease this calculation. We could do that with the math down here, saying this minus that, or we could make it a negative number by saying, instead of just putting equals, I'm going to put negative of that 0 and enter. Now, of course, that doesn't make any difference right now that I have negative of that amount. Now it's still 0. But when we start to populate it, it'll show up as a negative number here, meaning we want to decrease the equity by the amount of draws. So I'm going to go ahead and underline this amount. That should be underlined already on yours. And now we're going to add up or calculate the net decrease in this case, which is the owner investment minus net income minus draws. And it should actually be a net increase. I'm going to change this. It should be a net increase. And so note that although we have a net loss here, we have an investment of 65,000. So it's actually an increase, meaning this number is going to go up at the end here by this amount, the sum of those three. We can go ahead and use the sum function here to calculate this because it's going to say this number plus a negative, which is really a subtraction, plus or negative 0, which will just be 0. So it'll be 65,000 minus the 6,222. So we're going to say equals SUM, double click the sum function, highlight these items. That will give us then the difference of 58,778 right there. And then we have the end number, which is going to be the outer column, the beginning balance plus the activity. That will give us our ending owner's equity. I'm going to do that with the sum function again. It's going to be equals SUM, double click the sum function, highlight that outer column, and enter. That'll be the 144,175. I'm going to highlight that too because that should tie out to the balance sheet. I'm going to make that yellow. And then we're going to go up to the balance sheet. 144,175 is right there. I'm going to make that yellow as well. So that's where these things tie out. If we take a look at this, we're going to say, how did we get this number again? You could take it directly from the statement of equity. What we did is we basically calculated this number 2 times, and that gives us a bit of a double check. We're going to say, how did we get it here? We just took all the blue numbers. All the blue numbers there, and credits minus the debits is that. Then we took that same number and broke it out to its components. One component, the income statement, that's all this piece of all the blue numbers, adding up to 6,222. That is this number. Then we added to that 6,222 part of the activity, which is the beginning balance and the draws. That done in the statement of owner's equity, and that adds to the ending balance here. So in essence, this now has been recalculated, seeing that we can see each account line by line in the income statement and statement of equity to get back to that same number, the 144,175 that we see there. Now note that all this stuff can be automated. It's all being generated just from the trial balance. We also looked at the detailed report, the transaction report by date on the QuickBooks report. Note that our detail is really going to be the general ledger. So this is all the detail we have. It shows the activity by account, and it'll show all the detail of the transactions that are going on. And we have the detail, of course, of the general ledger, which is going to give us the transactions by date that we have put those in place. So when we look at the detail account, or the different types of accounts that can be generated from a QuickBooks system or some accounting system, they can really rearrange those numbers in a lot of different and great ways that could all be automated in a similar way as we just put together the financial statements here. Note that as we make changes, and we will make changes in the following month, then all of this stuff will be updated automatically as it has been through the beginning process, and that's an automated process that can be done in QuickBooks and just rearrange these numbers. The more we know about how that happens, though, the more we can interpret what is going on, interpret the financial statements, make future decisions upon them, and make adjustments if there's problems. Next thing we're going to do next time is we're going to start the next month, and we're going to need to do the closing process in order to start the next month, and then we'll move forward with the next month, and then go do the adjusting process at the end of that month, the financial statements once again for the second month of operations.